Navigating the real. Key considerations in investing in commodities and infrastructure. In the realm of investment, real assets, specifically commodities and infrastructure, stand as tangible pillars with unique dynamics and considerations. Investing in these realms requires a keen understanding of market intricacies, risk factors, and the broader economic landscape. In this exploration, we unravel the key considerations that guide investors through the landscape of commodities and infrastructure, shedding light on the nuances that define these real asset classes. Commodities. The raw essence of real assets. At the heart of real assets lies the diverse world of commodities, raw materials that fuel economies, drive industries, and serve as essential building blocks for global trade. Investing in commodities spans a spectrum from precious metals like gold to energy sources such as oil and gas, each carrying distinct challenges and opportunities. Supply and demand dynamics, ***. One of the paramount considerations in commodity investment revolves around the fundamental forces of supply and demand. Shifts in global demand, geopolitical events, and production disruptions can all exert significant influence on commodity prices. For instance, geopolitical tensions in major oil-producing regions may disrupt the supply chain, causing oil prices to spike and impacting the performance of related investments. Market cycles and volatility, ***. Commodity markets are renowned for their cyclical nature, influenced by economic cycles, weather patterns, and geopolitical developments. Understanding these cycles is crucial for investors seeking to capitalize on potential upswings or protect against downturns. Commodities, often characterized by heightened volatility, require a strategic approach that accounts for short-term fluctuations while aligning with long-term investment objectives. Diversification benefits, ***. Investors often turn to commodities as a diversification tool, as their performance may not necessarily correlate with traditional asset classes like stocks and bonds. During periods of economic uncertainty or inflationary pressures, commodities can provide a hedge, offering a counterbalance to the performance of financial assets and enhancing overall portfolio resilience. Infrastructure. Building for the future. Infrastructure, encompassing a spectrum from transportation networks to utilities and telecommunications, represents the backbone of modern societies. Investing in infrastructure offers a unique set of considerations, combining the need for stable, long-term returns with an understanding of regulatory frameworks and project-specific risks. Stability and income generation, ***. Infrastructure investments are prized for their stability and income-generating potential. Assets like toll roads, airports, and utilities often operate in regulated environments, providing a steady stream of cash flows. Investors attracted to reliable income streams and the potential for capital appreciation may find infrastructure investments aligning with their income and growth objectives. Regulatory landscape, ***. Navigating the regulatory landscape is paramount in infrastructure investing. Regulatory changes, government policies, and permitting processes can significantly impact the viability and profitability of infrastructure projects. A nuanced understanding of the regulatory environment in different jurisdictions is essential for investors seeking to mitigate risks and capitalize on opportunities in the infrastructure space. Project-specific risks, ***. Infrastructure projects often come with project-specific risks related to construction, operation, and maintenance. Construction delays, cost overruns, and unexpected operational challenges can impact the financial performance of infrastructure assets. Thorough due diligence and risk assessment are critical components of successful infrastructure investing, requiring a careful examination of project fundamentals and potential hurdles. Environmental, social, and governance (ESG) considerations, ***. In both commodities and infrastructure investing, the rise of ESG considerations has emerged as a pivotal factor. Investors are increasingly attuned to the environmental impact, social responsibility, and governance practices associated with their investments. Companies and projects that adhere to sustainable practices may be better positioned for long-term success, as global trends prioritize environmentally conscious and socially responsible initiatives. Environmental impact, ***. Commodities, often tied to natural resources, face scrutiny regarding their environmental impact. Sustainable and responsible sourcing practices are gaining traction, influencing investor preferences and market dynamics. Similarly, infrastructure projects are evaluated based on their adherence to green standards, energy efficiency, and overall environmental sustainability. Social responsibility, ***. The social impact of investments in commodities and infrastructure cannot be overlooked. From community engagement in resource-rich areas to the societal benefits derived from infrastructure projects. Investors are increasingly focused on aligning their portfolios with socially responsible initiatives. Companies and projects that prioritize social responsibility may gain a competitive edge in the evolving landscape of real asset investing. Governance practices, ***. Effective governance is a linchpin in the success of real asset investments. In both commodities and infrastructure, investors scrutinize the governance practices of companies and projects to ensure transparency, ethical behavior, and alignment with shareholder interests. Robust governance frameworks contribute to the overall risk management strategy, fostering investor confidence and supporting the long-term sustainability of real asset investments. Conclusion: navigating the real asset terrain. As investors venture into the realm of commodities and infrastructure, a nuanced approach that balances risk and reward is paramount. Commodities, driven by supply and demand dynamics, market cycles, and diversification benefits, present a dynamic landscape for those seeking exposure to tangible assets. Infrastructure investments, rooted in stability, income generation, and regulatory acumen, offer a strategic avenue for those with a penchant for long-term, impactful projects. The integration of ESG considerations further underscores the evolution of real asset investing, aligning portfolios with sustainable practices and responsible stewardship. Whether delving into the fluctuating markets of commodities or embarking on transformative infrastructure projects, investors armed with knowledge, diligence, and a strategic mindset can navigate the complexities of real assets, unlocking opportunities for growth, income, and positive societal impact.